Welcome to our comprehensive guide on VA residential income requirements for Kentucky veterans. If you're a veteran in Kentucky looking to secure a VA home loan, understanding residual income is crucial for your mortgage loan approval. Over the next slides in this video, I'll go over VA residual income and how it affects your mortgage loan approval. Residual income is the money you have left each month after paying all your major expenses to include your mortgage, car insurance, cell phone bill, creditors on the credit report, child support, if there's any. The VA creates these requirements to make sure veterans and their families have enough money left over for things like food, gas, and clothing to make sure you can afford the house and still afford your lifestyle. Unlike conventional loans that only focus on the debt to income ratio, VA loans emphasize residual income. That's a big reason VA loans in Kentucky has some of the lowest foreclosure and default rates, even with no down payment requirement. VA loans offer incredible benefits for Kentucky veterans and active duty soldiers. No down payment, no monthly mortgage insurance, and lower interest rates compared to most conventional loans. The residual income rules we're discussing today help ensure you can comfortably afford your house payment and still afford a comfortable lifestyle. These advantages help thousands of Kentucky veterans, homeowners, active duty to remain some of the strongest programs available. Residual income is calculated a little bit different than what your debt ratio is. We start with your gross monthly income, not your net, your gross, before taxes, insurance, and stuff is taken out. From that, we subtract your taxes, your proposed mortgage payment, your principal, interest, taxes, and insurance, meaning your total house payment, your estimated utilities, and any child care expenses like alimony or child support, and all those other monthly debts. What's left is your residual income. For Kentucky veterans which fall in the South region, you need to meet the VA's minimum chart. If your debt to income ratio is over 41%, you'll need to have at least 20% more than the standard minimum. VA residual income requirements, they vary by region. Kentucky is in the South region, as you can see by the chart below, which has lower requirements than the the Northeast or the West. For an example, a Kentucky family of four with a loan amount over $80,000, you must show $1,003 in residual income per month. A family of five or more needs $1,039. You add $80 per person for families larger than five. Understanding these numbers helps you know where you start before applying for a VA mortgage loan. Understanding regional difference, the VA adjusts requirements based on the regional cost of living. Kentucky South region classification means lower minimum standards like states like New York, California. For instance, a family of three in Kentucky only needs $889, while a family in the western part of the United States needs around $990. That's the advantage of buying a house in Kentucky. The cost of living, it's much less. Residual income versus debt to income requirements. Residual income and debt ratio go hand in hand. The VA prefers you have under 41% on the back end, but residual income, the actual cash left over after all monthly expenses, is weighted more heavily. For example, in Kentucky, and a family of four has a 43% debt to income ratio, they'll need residual income of about $1,204 a month instead of the $1,003. This buffer helps ensure you can truly afford your home, even with a slightly higher debt to income ratio. So there's basically two ratios. There's a front end ratio and a back end ratio. VA is more concerned with the back end ratio, whereas like FHA, USDA, Fannie Mae, they're concerned about both the front end and the back end. Strategies for meeting requirements. Here are some strategies that Kentucky veterans and active duty soldiers can look at meeting the standards. Pay off smaller accounts to free up your monthly cash flow. Consider your spouse's income. Could factor in as far as helping the residual income. If you do that, remember that the credit report will be pulled for the spouse if you use their income. You can also look at homes with slightly lower payments to increase your cushion. And don't forget, all document sources like disability, retirement, even part-time, can be used for loan approval. Thanks for watching my guide on VA residual income requirements for Kentucky veterans and their mortgage loans approval. If you have any questions about your situation, reach out to me directly. I work in all 120 counties of Kentucky. I'm a former Army tanker, 19 kilo, and have over 20 years of doing VA loans in Kentucky, with probably over 400 done in my entire career. Please reach out at 502-905-3708, 502-905-3708, text or call. I'm only licensed in Kentucky. My MLS number is 57916. Evo Mortgage, my employer, is an equal opportunity employer. We're also abide by the Equal Housing Lender Standard set by HUD. My MLS number is 57916. My company MLS number is 1738461. This information is for educational purposes only and not a commitment to lend. All loans are subject to credit approval, property eligibility, and program requirements. VA loan benefits are available only to eligible veterans, active duty members, and surviving spouses. I'm not affiliated with the VA, but I've done a lot of VA loans in my career, so I'm a pretty good resource for that. If you have any questions, please reach out.